swing.
Welcome, crypto family, to the third episode of Cryptographics. It's time to reveal the indicator that I believe will tell us if we're ready to begin the bull run. So here you have it. The indicator on the screen is on balance volume. I find OBV interesting as most indicators only use data from the time and price dimensions. However, there is a third dimension to markets which is often overlooked, and that's volume. OBV uses all three of these dimensions with the intention of providing a leading signal. If volume remains level as price increases or decreases, OBV will generally reflect the price in its formation. But if volume builds up as the trend is being established, then OBV will start to exaggerate its direction more than the price. It's this divergence that can tell us if the trend is strong or relatively weak. In some cases, you may even see divergences similar to how you would in the RSI. OBV, like all indicators, has its weaknesses. It can be misleading in some instances. For example, you could be looking at an exchange which is losing interest over time, and that would make it appear as though the interest in the asset is low when it may not be the case. So in this video, we'll take a look at the OBV, what it's showing us on aggregates from TradingView. Another criticism of OBV might be that it is potentially misleading in lower time frames, as there's a lot of inorganic volume, and so this tends to work most reliably in the higher time frames, such as weekly. So here we're looking at 2012 to 2013. As you can see, Bitcoin had just had a bear market and then went into a accumulation phase here before hitting the 0.236 Fibonacci. Interestingly, in the OBV, we had already hit an all-time high at that point. Bitcoin continued to climb in towards the halving, and then the next occurrence was the price breaking into an all-time high, at which point OBV was well above its all-time high. The next example brings us to 2015. After we had just had the 2014 bear market, we went into our accumulation phase before running up to the 0.236 Fibonacci retracement, and it wasn't long after that moment that the OBV took us into an all-time high. Then we entered a reaccumulation phase into the halving, and it was quite some time after we had a nice grind up, but it was quite some time after that the price actually broke into an all-time high. Again, same story here. The OBV was well above all-time highs at the point the price was at its previous high. Our next example takes us to 2019, where we had a very enthusiastic short-lived rally up to about 13,500 from roughly 3,100. This rally actually got rejected at the 0.618, and the interesting thing about this is how the OBV was actually mirroring what the price was doing. So the price had not got into an all-time high, it got up to quite a high retracement, but the OBV was still mirroring the price and remaining below its all-time high. The result of that was a sell-off, and for people who were in the market at this time, they'll remember how awful this actually was. So it was 71% down over the period of 259 days. before we managed to put in the next macro bottom following the convid crash. So the next example I have isn't very far away. Following our previous failed attempt at the 618, we went into our convid crash and had a very strong recovery. This time it only took us to reach the 0.382 before the OBV had actually put in an all-time high. So at this point we had a divergence which was favoring us and going in the opposite direction. That was really when we were able to enter our reaccumulation phase. I think that one of the reasons that we weren't able to break through the retracements on this attempt was because we never actually had a reaccumulation phase. It was later on that we actually established our reaccumulation phase, and then we had this signal flash where the OBV broke its previous high while the price was in reaccumulation. Then we actually made quite nice progress up to the highs in price, and again exactly the same story. OBV is in quite high levels at the point that price was at all-time highs. So there are a couple of key differences in the 2019 to 2021 cycle. So not only did we have one failed attempt before making it through on the second attempt, you might also notice that I haven't marked the halving off here, and that's because the OBV actually broke its all-time high confluent to when the halving took place. So that's just quite interesting. As you can see, the previous two attempts, which rhymed quite a lot in their nature, we had the 2.36, an OBV all-time high break, the halving, and then the price all-time high break. It was exactly the same here, even the same for extension, 0.236, OBV high break, halving, followed by price break. And then in 2019, I had one failed attempt at a higher retracement before going into reaccumulation, breaking the OBV high at the 0.382, and then continuing. So quite a different structure, quite a different nature. And so let's move on to where we are now so we can see if that resembles anything that we've seen before. So here we are in 2023, and I expect what you were hoping to see is that the OBV has already surpassed its all-time highs. Unfortunately, that's not the case. I can see a few things on the charts that provide mixed signals with regards to this. I suppose we'll start with the worst. So the worst thing is we have worked our way up into retracements near to the 618, and so far the OBV is mirroring the price. So this isn't ideally what we would have wanted to see. So despite the OBV not being in all-time highs and retracements, there are still a few bullish things that I can see. So one of those things is, unlike 2019, we have made a much healthier market structure. It's quite clear that we have seen in an accumulation and reaccumulation phase, which before we'd not seen. We had the COVID dump before, then went into reaccumulation. So that looks a lot better to me. Plus, I think the sort of outlook at the moment is that any dip is really an opportunity from here. Confidence is returning to the market. It's possibly a little bit euphoric up here, but it's mainly the OGs that are paying attention, and not grandma yet. So if we did see a dip, then I would anticipate that there would be quite a lot of demand for that dip. So that's another thing, and this sort of structure would give the OBV much more time to potentially break out of the channel that it's in currently, and if it did, it may move up to the highs quite quickly. That can happen. There's another observation that I've made. You can probably see a date up here. It's 124 weeks. So why have I put that there? Well, interestingly, this refers to the previous cycle we saw in 2019, where it actually took 124 weeks for the OBV to go from its high and then reclaim that high again. So that's quite interesting. It's also quite interesting that that date is approximately where the halving is. Again, in the last cycle, if you remember me saying, we actually broke the high in the OBV at the same time that the halving occurred. So my best guess would be what we're going to see is we're going to see the market cool off, find some demand, and then break out of this structure towards the upside on the OBV as we make a second attempt towards retracements. That would be my best guess. What would make me change my mind? Pretty much two things I could put that down to. A loss of these levels, that would make me quite concerned. The other thing that would make me concerned is actually seeing this structure in the OBV start to make new lows and actually break the funnel towards the downside. This would also be, in my opinion, very bad news. Now, this isn't my primary prediction. I'm just saying, if I did see something like this, then I would certainly change my primarily bullish tone. So, in summary, I think that we need a little bit more time. I think that we will eventually make it through the retracements. And if I had to take a guess, I would guess that the OBV may be breaking highs approximately around the halving. Let's see. Nobody really knows what the market is going to do. We're all here for dubious speculation, but I hope you've enjoyed the video. We're going to keep an eye on this, and if there are any developments, then I'll be sure to update you. Thanks very much for watching.